Terra Firma is a private equity fund that prides itself on putting its money where its mouth is. Its founder, Guy Hands, gives the impression he wants to revolutionize the private equity market, taking it away from the world of mega funds and turning it into something more personal. In a world where sustainability's become a new mantra, Terra Firma is adamant that a new kind of capitalism is the only way forward. I'm Andrew Wilson, this is TBD Media, and we're in Davos to talk to Guy Hands. Guy Hands, thanks very much indeed for joining us. First of all, give us an idea about how Terra Firma got where it is today.
Yeah, Terra Firma started December 1994 with one investor, Nomura. We grew over a number of years, and by 2007 we had over 200 investors and about 10 billion under management. Then the credit crash hit in 2008, and we focused very much on the funds we had, but we didn't raise another blind pool fund. 2017, I made the decision, didn't really want to do another blind pool fund, but we felt we needed to obviously manage out the existing investments. And we moved to a private office structure, but what I describe as a professional private office structure, working with other small institutions and other private offices.
And does that tie in with the vision that you have for Terra Firma and indeed your own vision?
It does. What I discovered was over the period of time through the power of compound interest, the money I'd invested had done actually for me far better than what I'd actually earned from managing other people's money. So my focus post 2017 has really been on how do I invest my money and how do I invest it alongside other people who are in a similar position to me and have similar objectives.
Why do you think there's a need for this type of business?
I think what's happened is the private equity business has moved from being very entrepreneurial to being very institutional. And if you are a pension fund, a large insurance company, that might make sense. But if you are a family office or a smaller institution, you really need to get those excess returns, and that's what really interests you. And you're not going to get that from a very large institutional investor. You're going to get it by investing with people who have skin in the game. And so one of the things we do is we want to put at least 25% of the money into every single deal.
So is that a lesson learned along the way? I mean, is that what you feel now is key to making a business successful?
I think alignment and having a direct connection is absolutely key. Private equity has been incredibly successful over a very long time, but the returns have consistently come down. And one of the reasons I think for that is the business has got bigger and bigger, and the people involved have less and less connection directly themselves, personally, with the money that's been invested.
So has that changed your long-term view about where you're going, and does that in turn affect how you're dealing with things short-term?
It does. From a long-term point of view, I'm focused much more on how do I invest my own money rather than how do I invest money. Sounds slightly different. When you're running a fund, you're trying to get money invested at a certain rate. When it's your own money, you really are concerned about preservation as well as about return.
There's a bit of ownership in that. Because it's your own money, you like to see what happens to it. Does that allow you to play into your own sense of ethics about where the world is going?
Very much, and I think that's one of the things. With 200 investors, you had to sort of weigh up what would the average investor feel about a transaction. When it's very much your own money and you're working only with family offices and small institutions who share and are aligned on that particular transaction, you can be very clear. So the deals we've turned down in the last 2 years, which probably as an institution would have been happy to do because we'd have said, look, there's a defense between what the institution needs to do to maximize, whereas as an individual, they're just deals I just would not do, I don't feel comfortable with.
I suppose one of the great benefits of private equity in general, but for the Terra Firma model in particular, is that empowering ability to get involved in whatever it is you're investing in.
Yeah, that's absolutely correct. When we bought CPC, which is a cattle business down in Australia, we had a look at it, and the traditional Australian cattle business is very macho. So we found the vast majority, over 90% of our employees were male. We had an issue with regard to health and safety, and we had concerns with regard to husbandry. What we did by moving to 50, we're roughly 50% female, 50% male now. And more importantly, it's out at the cattle stations themselves, is that we've seen a great improvement in health and safety. And though the cows can't tell us, we think they're getting treated a lot better now as well.
Australia's got its own problems, come to that. I mean, how important are climate issues and sustainability issues that are around today in terms of where you're looking for the next opportunities?
They're very, very important. We don't look at any deal without actually measuring up and thinking about it. And thinking, A, can we make a difference? And B, what is the effect of this industry on the world as a whole? It's a silly thing, but it's an incredibly important thing, was we redesigned the plastic ice cream holders in our McDonald's business. Now, we have 200 million customers a year, and if 25% of them take an ice cream and you cut out 25% of the plastic used to hold the ice cream, that's got a huge positive effect. Again, in abolishing plastic straws, it has a huge positive effect.
Tell me a bit about, particularly with looking at new propositions, prioritising ethics in your approach to the work.
I think the first thing you do is you try and work out what is the business actually doing for the customer. And that is almost the core to it, because if what it's doing for the customer is just making money, then you immediately can say no, because it's not actually adding any real value. And it's interesting because, take a business like we've invested in, like McDonald's. A lot of people out there think of McDonald's as just producing fast food and not really caring about the dietary habits, etc., which is actually total nonsense. We spend an enormous amount of time, the company spends an enormous amount of time, and we do, on thinking about actually what is going into it, how much salt, how much sugar, and also, are we giving people the ability, if they want to be vegan, to be flexitarian, and are we trying to get children to eat chips, or are we offering them carrots?
Final thought then, I mean, particularly somewhere like Davos, where people talk a lot here about disruption and about the positivity of change and transition and things being fluid. You've got a model. It's not new, but it's developed into something new, perhaps. Do you feel that perhaps you're setting a standard that others can follow for the future?
I think a lot of what I'm doing has already been done in the States. I think in Europe it hasn't been done to the same extent. The private office industry in the States is very, very well developed. In Europe, it's less well developed. So I think I'm trailblazing in Europe, but I wouldn't say I'm trailblazing in the world.
Does that feel good to do that?
I like Europe. It feels pretty good to me.
Guy Hans, thanks very much indeed.
Thank you.